Is there something that is structurally broken or wrong or deficient, particularly in the Indian context when it comes to deposits?
See, the thing is that I think there is a serious problem we have in terms of raising of deposits. Look at the way monetary policy works. I lower the repo rate by statute. 60% of my loans get repriced, the EBLR. Then the MCLR also gets adjusted. I have to also lower my deposit rates, otherwise I cannot maintain my NIMs. So what do? I have to lower my deposit rates. I lower my deposit rates, I lose my deposits. Today, for example, even as an individual, if I have to put money in savings, 6 to 7% is a rotten return to get. I can get 12% in the market. You put it in a mutual fund, sit for 10 years, maybe 3 years they are negative returns, 7 years ago, on an average, I'm going to get 10 to 12%. Now, how do I balance this out? I think something which we, from the point of view of banks, we've been putting forward to the finance minister is that you need to give certain tax incentives for deposits. Not just because I'm working in the banking sector and I want this thing to be sorted out. Bank deposits are actually used, number one, for government borrowing. 18% SLR is there, mandatory. Second part, even in terms of lending, 40% is actually meeting the statutory requirements of the government, which is actually something which is required. So therefore, we have this asymmetric system when it comes to taxation. Equity gets better benefits, debt does not get it. Just remember when that indexation part on debt went off, nobody is now investing in a debt fund because even if I get a return of 7 or 8%, I pay 30% tax on it. So I think this is something which has to be addressed. India is still a bank-oriented economy where banks are financing infrastructure and MSMEs, priority sector, every particular sector. We are not in a stage where we can say, let the market decide. So I think today we have this crazy situation. Banks don't have funds. So what do? We have liquidity shortage. RBI is actually going in for OMO. So what are you doing? You're actually you're printing money and giving it to the banks. So this can be a short-term solution, but I think in the medium term, we really need to think seriously about it because as we are spreading financial literacy, people are becoming more perspicuous. They're saying, why should I go for a bank deposit? Let me go to the market. Some of them went to F&O and they burnt their fingers out.
And there is clearly a generational shift also.
Absolutely.
I just, apart from the tax part, I think if you just see for example, bank deposits are basically a tax even therefore you can encash them. That is opposed to mutual fund, which is basically when you redeem them, you are taxed. So I'm not getting into the tax part, that's obviously there. But there is another angle to it, which is very important, is that UPI transactions. India is now actually 70% of India's GDP is now UPI transaction.
Please take note of that number.
What is happening is that CASA, which is basically the low-cost deposit, is that money is actually now used more of a precautionary motive. So when you are making a payment, that money is going out from my bank to going to other bank, and that has become actually significantly unstable across the banking deposit system. The overall pie may change, may not change. So that is another aspect we need to take into consideration. And regarding the deposits part, I think the banks actually are doing, if I give you some statistics, the total number of depositors in the banking system, total number of accounts is more than 200 crores and the credit accounts is actually around 30-35 crores. So we have to support these depositors in terms of a fair return. A large part of them are also senior citizens because India doesn't have a proper social security system. So I think these are intricacies which we need to solve, but this requires larger discussion.
Just one statistic.
Yes, please.
Around 40% of your fixed deposits are held by senior citizens. So they also have a large spending power. You give a lower return, automatically your spending power also comes down. It will be affecting your consumption growth and GDP growth.
So maybe since there are two bank economists, I can give a slightly counter view. I think banks, this idea of that the government has to help you and taxes should be even across different asset classes, yes. Initially you needed to encourage markets and so on, so they were given a tax advantage. And the move is towards simple system tax and even across sectors. We'll see something happening there. But I just want to remind the bankers over here that they were so scared when repo rates were falling. They were really worried that they have to pass on to loans and then they can't, cut deposits and so on and so forth. And what will happen to their profits? But they've done very well over this last 2 years during this macro cycle. So they have many
respond to that.
Just one data you want to show. Total banking profit in FY14 was 80,000 crore. Today, the public sector bank profits are more than the private sector banks. In the last 9 months, the private sector bank's profit is 1.5 trillion. The private sector bank's profit is 1.2 trillion. And this number is going to cross 4 trillion in this year. So from 80,000 crore to 4 trillion in a decade. So I think Indian banking is significantly profitable. They are investing, they are giving credits, and of course they are mobilizing.